What's going on, YouTube? It's your boy Money Mayor here, and yeah, I got another 5 video for y'all. It's Friday today. It's a beautiful Friday. I'm happy. Hope y'all are happy too. And in today's video, we're gonna be going over risk management. And the reason why I wanted to make this video is because I know that a lot of y'all are not the most seasoned traders and don't really understand that risk management is really what keeps a trader's longevity within this game. So I'm here to answer some questions on risk management and help you guys be able to improve your skills on that, basically, and use it through my experience. You know, I'm a trader for 4 years right now on present day, and a lot of the money I've lost has been because of poor risk management. And I have a personal story to tell. We're gonna get into that real fast. And it's just a story that I want to tell to not only remind myself, but also kind of give y'all guys like a realization that, look, I done dealt with my risk management struggles as well as has every other trader that's investing some type of money into any market. So my story crazy. Like, my story, it's some stuff where it's like it should have never happened, but it happened, and it had to happen, basically. So I'll put it in terms like this, okay? So my initial investment was $1,000. I put $1,000 into my broker at the time. Still currency trading, still trading the GBP, JPY, but $1,000 was my initial investment. And my risk management strategy at the time, I was probably risking, I started off risking like 10% per trade until I got to like $1,500, right? Once I hit $1,500, I started risking probably about, I was risking, let me say this too. Let me put it into context, all right? So when I'm placing my trades, I'm not just putting one trade in, all right? Like, I'm scaling into these moves like crazy. So it may be one trading setup, but I got like 10 different entries in that joint. So it's like the risk, the actual total percentage of risk I was risking on my account was so crazy. So yeah, like I was saying, I was risking at times 15% of my account. I was risking 20% of my account, and it seemed as though the more I gained capital in the account, the more percentage of the overall account I was risking. And it's funny because during this time I trade, I was just hitting, so it didn't really matter. Like, it really didn't even matter because I was on some winning streak type time where I was like, bro, I was like Jordan, I'm going 6 for 6. Everything is hit. All week I'm hitting. So, you know, at the time I'm thinking this feeling of me risking all this money is justified because, you know, I'm hitting my trades and all that. And now the account, I'm doing this, the account's at like 5,000 right now. I'm not stopping. I'm still risking about like, when that account was at 5,000, I remember seeing $1,000 in drawdown. So that's, what's that, 20%? I seen 20% of my account in drawdown. This is why I made this video. Like, this is exactly why I made this video, and I'm glad I can tell this to y'all, because risking 20% of your overall account is ridiculous. Like, I don't care. I'm not doing that. To this day, I'm not doing that, and I shake my head at the fact that I was doing that. That's ridiculous, okay? So, yeah, 5,000, I'm still doing that. Now, you feel me, the account's at like 9,000. So the goal was to get the account at 10,000. The goal, or the account was at 10,000, okay? And it's like, when I look back, I wish that I would have realized the growth that I had made with that money. But I got greedy. I got just unconscious from the fact that we got all this money, but I'm still having the same damn risk management. Bro, I'm still risking 20 to 25% of my account with $10,000. Like,
Stop it. Get some help.
It's insane. It's really insane. Because when I just think about it, it's like, bro, why are you doing that? But I ain't know. And it's crazy because I really ain't know. Because look, the markets showed me real fast that, bro, that's not how you're supposed to do it. Man, when I tell you I lost that $10,000 using that same risk management in 1 whole week of trading, like, first trade, 2,500 going, boom, we at like 7,500.
God, please, no! 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 No!
Next day, boom, sage up. Still ain't hold back, bro. I just said, F it, we still gonna risk the same amount. Boom, boom, done. Account dead.
Oh, God! I'm going with you. Oh, God! It's time to go back.
Man, y'all wanna know how I was looking? Man, it's funny, like, when you take a loss like that on the charts, you really, the markets just have you there stuck, like, you just be like, what? Bro, I don't know if I was shaking my head. I just know I was just staring. Cause you don't understand. Like, some people, if you never traded or invested your money in the Forex market, you don't understand that sometimes, well, earlier throughout my career, because I don't do that now, and I don't think that way now. But when you first get started, you start seeing those numbers flipping on the screen. It's kind of like a game. Like, you're not really thinking like, oh, this is real money. Like, I could close this trade and withdraw and put in my bank account right now if I really wanted to. So it's like, at the time, I wasn't even thinking like that. Like, I was just thinking like, well, I'm just trading. Like, yeah, I'm up, you feel me, 10K, but ain't really do nothing with it. But yeah, and that's literally all because of bad risk management. When I tell y'all that story, it's just bad risk management. Yes, I understand that risk management allowed me to get to 10K, but at the end of the day, that's not how you sustain longevity within Forex. It's all about risk management. So yeah, that's my story. We about to break right down into the top 3 reasons, or the top 3 risk management tips that's going to follow along with that story right now. But yeah, please, listen to that story again and just kind of take it in, because it's really like, yeah, it happens. It gets sick out here in this Forex game. The market don't care, man. He don't care about that. They gonna get their money playing with the church's money. Feel me? But yeah, we're gonna transition to the part 2 of this video. Leave a like if you haven't already. Y'all know it's gonna be good. It's gonna be educational. It's gonna be all that good stuff in it. So leave me a like, leave me a subscribe. Let's go to part 2. All right, what's going on? We back with part 2, and like I said, I got 3 risk management tips that I wanted to share with you guys, and we're gonna hop straight into it. Y'all know how I like doing it. So the first risk management tip has all to do around stop loss placement, and well, let me not say stop loss placement, but just stop loss orders in general. So just overall stop losses. Like I said, everything gonna be from my experience and kind of what I'm doing current day. So it is all subjective. But in my opinion, I always say do no more than 15 pips stop loss for any order that you're placing. And why I say that is just because I feel like if you are getting to the market, you are basically setting yourself up for greatness. You're saying that this position that I'm taking is destined for greatness. And the position that's set at that status or quota or whatever you want to call it, it shouldn't really need more than 15 pips of wiggle room to get in the direction that's supposed to be going. Now, how do you do that? Of course, you have to be on the smaller time frames. When I tell y'all, I be dicing up the 1 minute time frame, like it don't make no sense. Like, ooh, just speaking about it just kind of get me excited, because it's like that's really where the sauce is at. Like the 1 minute time frame, 2 minute time frame, 5 minute time frame. Yeah, that's really where you get those sniper entries, and really where you get those stop losses that are 15 pips or less, basically. And another thing I gotta say about stop losses, for me, once it's hit, it's hit. Like, once your stop loss gets hit, it's over. It's it. The reason why I say this is, like I said, it's my experience. And back in the past, I was in a bad habit of not even setting stop losses. Like, I would keep a mental stop loss. Like, yeah, I think when price hits this, I'm going to close. But in reality, once price got to that point, that mindset of, oh, it could reverse here. Oh, maybe it's a support here, started kicking in. And it's like, I led to myself being exposed to bigger losses than I originally intended. So that's why I say when it's hit, it's hit. Like, it's over. It's the trade's done. It's not to say you can't look for a better entry. I mean, maybe your entry was just too high or something, or too low, and maybe prices coming against you to get a better entry at a different support or resistance. Um, if you do that, that's on you. Me, I do give myself two chances. Like, if stop loss gets hit, I'm gonna give myself another chance, because maybe, like I just said, the situation didn't play out to where my entry wasn't the greatest. But no more than two, I'll say that. Moving on though, risk management, we got to talk about lot sizes, because that's essentially where the money is. That's where everything's at, is in the lot sizes. If you don't know what a lot size is, that's basically your money multiplier, I like to call it. It's basically determines how many or how much money you make per tick or per pip within the market. So if price goes up 15 pips and you have a high lot size, you're going to make a lot of money. As compared to a person that is making the same amount of pips but has a lot lower lot size, they'll make a lot less money. Um, that's a little bit about what lot sizes are. And as far as risk management, the way I calculate my lot size, that's always like the biggest thing, is figuring out, okay, what lot size to use. I go with this app. It's called Stinu, Stinu, in the App Store. Um, I'm gonna put its information somewhere within this video. Y'all see it. But that is how I risk. That's how I do my risk management and figure out what lot size I'm gonna put per trade. It's real easy. It's percentage based. So say if I wanted to risk 5% of my account, I type that in the calculator. I type how many pips I'm going to be risking on that trade, and it'll calculate how much of a loss I'm going to take and the lot size I should use. So yeah, get the new. And okay. So when it comes to another thing about lot sizes is, for me, I like scaling in. So like I said, this video is really based upon like my experience with trading. So basically when I'm scaling in, I've gotten into the habit of just having the lot size that I originally scaled in with. So say if I entered the position with a standard lot, if I wanted to scale into the market, say if like the market presented another opportunity for me to get into the market and basically add on another position, I'm gonna put on a 0.50 lot basically. That's gonna help me be able to. That's gonna help that position be able to basically maneuver and fluctuate without me being without me feeling any type of anxiety or worry that the position is going to blow my whole account. Um, yeah, so that's just a little bit on scaling in and a little bit on what I do. Okay, and the last risk management tip I got for you guys today is about risk to reward ratios and basically the proper one to use. There's a lot of people that do 1-to-1 risk to reward ratios, 1 to 2s, 1 to 3s. But yeah, 1 to 3 is the golden risk to reward ratio I've found out just throughout my experience of trading. Um, if you don't understand the whole concept of risk to reward ratios, it's basically if you are risking $1 in the market, when you lose, like if you lose $1. Now, if you win, you should see $3, 1 to 3. And that really plays a big part when taking losses. And what I mean by that is, by this example here, if I get into the market in the first, like say it's the top of the week, first position I place on Monday is a loss. I'm down $1. Now, if I come back Tuesday, win a trade, now I'm up $2 because it's 1 to 3 risk to reward. I'm up $2 for the week. Now I got $2 worth of quote unquote cushion Okay, $2 in cushion. Now Wednesday, I lose a trade. Now I got $1. I'm still up $1 though, because that 1 to 3 risk to reward is allowing you to build some type of cushion. Mind you, this word cushion. Cushion just basically means that it's profit within your account. So if you have a balance of 100 and you win a trade and you win $10, you now have $10 worth of cushion. And cushion is very important, even in terms of risk management. Like I wasn't even planning on talking about that in this video, but cushion is what allows you to be able to add on a little bit more extra risk, essentially. Like, because now you're playing with the house's money, and that's really when, like I said, you can make a lot more money and really play around with it a little more, all that. But 1 to 3 is what enables that cushion, basically. That's why it's so important. Um, that's been my thing since I started trading. 1 to 3 restore rewards, man. Now, if the price goes above it and you feel me, we hit a 1 to 4, 1 to 5, hey, I'm all for that. You know, when it comes to that, that's just me holding my order and just making sure structure is being maintained on those smaller time frames. Like I mentioned, the 1 minute, 2 minute, 5 minutes, making sure it's being maintained. And then those type of risk rewards can get hit as well. But that's my third risk management tip, along with the other two that I stated. Like I mentioned before, stop loss orders. Y'all know about how important those are by now. Lot sizes, like I just mentioned a few minutes ago. And of course, the risk reward ratios are really the main 3 things that I feel like you have to keep intact in order to keep your trading career as long as you envision it. Like, because when I tell you, like, it's not going to last if you don't focus on these 3 things. And it's really one of the most important things when it comes to investing. So yeah, this is the risk management video. Definitely let me know if y'all like this style of video. Leave me a like I said, if y'all enjoyed. Subscribe, share the video. And yeah, I'll keep on doing more stuff like this, man. I got a lot of content, a lot of education, and I want to share it. So just let me know. Give me some feedback in the comments as well. Let me know what y'all thinking about the video. And I'll catch y'all in the next one. Peace.